Well, thank you guys for joining me on California Mortgage Girl podcast. Here I have Megan. Could you tell us about yourself, Megan?
Hi, Gabby. I'm so excited to be here. I'm Megan Bohannon. I have been in real estate for just over a decade. I just hit my 10 years, which I'm really excited about. I work at Remax All Pro, and I service the greater Los Angeles area, Antelope Valley, and LA market.
Wonderful. Thank you, Megan. And here we have our guest, which is Andres, and he has Sync Brokerage. Can you tell us a little bit about yourself?
Absolutely. First of all, very excited to be in your podcast. Thank you so much for the invite. My name is Andres Ojos. I've been in real estate since 2000, actually the end of 2008. Currently founder and CEO for Sync Brokerage. We have 3 offices in LA, and we also have a few offices in Florida, Miami, Orlando, and West Palm. Excited, to have this conversation with you and guide, educate the consumer.
Mm-hmm. Awesome. Thank you so much for being with us today. And last but not least, Jackie, let us know about yourself.
Well, I'm super psyched to be here. I mean, I'm just sitting next to a bunch of rock stars. So I am actually with Sync Brokerage. I've been in the industry for the last 7 years. And aside from being in real estate, I partner up with organizations that promote the welfare of the community as well as promote women in leadership.
Wonderful. Thank you guys again. So I basically want to tell you a story about me. So in 2020, I bought a house. I remodeled that house, and in 2023, I sold that house and made over $200,000. So with that being said, why is now still a good time to purchase a home in California? And Andres, I'll go to you
With
first.
me? I always think that regardless of the times, it is always a good time to buy real estate. In California, especially, the sunniest state. Real estate is probably one of the main drivers of wealth. And in reality, it doesn't matter what year or, where the interest rate is. It's always a great investment over time. Your property value increases, and that's how you can actually leverage your equity to, potentially buy another investment property, fund your business, or do other things that you want in life. So it's a great investment, honestly, anytime. Especially in California.
I love that. And with that, I know a lot of people own homes here and they have a lot of equity in their house. But a lot of the older generation don't know what to do with that equity. My parents own 3 different houses, probably worth $4 million, but they've never taken any money out to buy any more. So I'm trying to re-educate them, like, let's use that money to then purchase more houses. Doesn't have to be here. It could be in any state. But I think that people need to also know that they have equity, and a lot of people don't know how to use that equity. So I just wanted to put that in there. So Jackie, let us know why you think California is still a great place for buyers to purchase.
Well, I think you said something major. You said that you had about $200,000 in equity. So that's huge. I mean, to think of that kind of money that you've now made, right? I think a lot of people in their lifetime don't even or can't even possibly have that. So I think that's great. And like you said, if you were to just take that money out, invest it, whether you want to do a single family residence, multifamily, I mean, that is your house is your bank ultimately. So let that money work for you.
Mm-hmm. I was listening to a podcast just this morning, and it was from a stockbroker or a financial wealth builder. And he put in there is like, buy real estate. And I was just so happy to hear that, because a lot of times you didn't, in the past, you didn't hear them saying that. Now you're hearing them say real estate is a really great place to put your money. Megan, what's your thoughts?
Well, you hit already so many points, because I'm a huge advocate of buying real estate. I own multiple houses. I've never sold them because for me, I'm self-employed. So I think myself, there's my retirement fund to one day cash out on those. But you were saying certain things that people don't realize, saving money. Jackie said $200,000. Think about how long would it take you with a regular job to save $200,000? Here's your nest egg. It's a positive thing. But I keep seeing people do multi-generational purchasing right now, because your parents had that much money, or you're helping a grandkid, all these things. So I always think if I had a kid, I'd buy them a house right away, and it's their nest egg later. They can pay for their wedding, their college, all of these different things. So California's growth of equity is nothing I've seen before. I'm selling homes. I'm giving huge equity checks to people right now, which is also encouraging to buyers. It's don't rent. And I think that's one of our biggest topics is in California, why are you paying somebody else's mortgage at the highest rate possible?
I agree. I agree. So the next topic I want to talk to you guys about is the home loans. Like, what different types of home loans are there for buyers? And I have a couple examples. So I have a great friend, Gabe Giatani, and he owns a big electrical company. And he needed to buy a house out in Oakland, California. So it's Northern California. And the reason why he needed to buy that house is because he got a big job up there, and he needs to house 10 of his employees. So instead of renting or renting a house or
Staying in
putting them in
hotels,
hotels,
yeah.
yeah. So he's like, I need to buy a house. So he, as a lot of self-employed employers, they write a lot of their taxes off. So the next best thing is to use the bank statement loan. So we qualified him with 24 months bank statements. He put 20% down. His interest rate was 8.99. His monthly payment was 5,300. So and it's a 5-bedroom house. So he's able to house 10 people to that house and pay 5,300. And then in 3 to 5 years, he's going to be able to sell that house and, build the equity and then sell that house and make money, opposed to wasting money. So as far as that goes, so it's either renting or owning. People are wasting money on rent, or they could be owning and building their equity. That's what I'm teaching buyers all the time. So I guess on that question would you rather be renting a house, or would you rather be paying into your mortgage, which then in the future builds you equity, and you also have a tax write-off? So let's go with Andres. What are your thoughts with owning opposed to renting?
There is so many thoughts that are going through my mind right now. First of all, I was just processing your client's case that as a business owner, he bought a house to provide housing to 10 employees, which made me think about McDonald's business concept, which they own the real estate, and it just happens to be that the byproduct is selling hamburgers, but they are making money on the real estate part. Mm-hmm. So as a business owner, if you are able to leverage your business to go and buy real estate and perhaps have your LLC or corporation own that piece of real estate, that's an additional asset that it's increasing the valuation of your company at some point. I was just thinking that as a individual, absolutely. I mean, we just said it a few minutes ago. Anytime where you can have access to buy real estate, I think that now better than before, or at any time, we have different lending programs. I mean, you mentioned it, the non-QM. I bought my house with non-QM. There is also the FHA 3.5% down payment, conventional. I think Fannie Mae just approved multifamily with 5% down payment. Owner occupied, where you can use 75% of the rental income towards your qualifications. So there is tons of programs out there, grants by the city, especially LA has a lot of grants. Mm-hmm. I help a lot of clients actually taking advantage of those grants, where it was up to like $80,000 for closing costs and down payment. It comes with minor regulations, but again, as a family, being able to get into your first property using one of these lending programs and just waiting. Honestly, I've seen people getting 20-30% returns on their money in less than 12 months. You buy your first house. One of the things I always tell buyers, when you're buying your first house, don't be so picky, because this is not going to be your last house. This is just for you to get into it, get some equity, then leverage that equity to get into a better community, better house, bigger house, better school district. So little by little, you leverage each independent property to get to the final destination, or at least closer to it. So always buy.
I love that. I love that. Thank you so much. Jackie, same for you. Why buy opposed to renting?
I'm going to go with what Andres said. I'm just adding to everything he just said. I think ultimately what happens is a lot of people, unfortunately, don't know who to talk to. They don't go to the professional and the expert, like someone like yourself. And there's a lot of misconceptions and a lot of stigmas behind different types of loans. And so people automatically make that assumption that I don't qualify for this because X, Y, and Z, and my best friend and my brother and my sister told me, instead of going and talking with someone that actually is in the business. So I think it's just educating ourselves.
I think it's like getting rid of that fear for the buyer. And we were just telling them, like, you know, people always say they'd rather talk about their sex life than money. It was just really weird. But it's because people are nervous to be rejected by that or come forward with stuff. But it's like sometimes you're like, oh my gosh, I can't afford to buy. And all of a sudden they're like hounding us, like, get me a house, get me a house. But it is nerve-wracking to go through those things. But for me, as an agent, I am a listing agent for the most part. I help buyers all the time, but I've had to knock on doors many times to let that renter know you're getting your 60-day notice. You have to go. Breaks my heart. Usually a kid answers the door and I'm like, oh, just kill me now. But now they have to be prepared to go out and find another rental property. They have to have first and last month's payment. They have to go through all that stress. Or on the opposite side, you're renting and your landlord every year can raise your rent 10%. Like, how scary is that? So when people are nervous about these interest rates or you hear these big mortgages, I'm like, well, let's do the math. In 10 years, 10% every single year. What's your rent going to look like that you never can cash in on your equity and things like that? So right. I don't think it's ever a negative time to buy because it is your property and nobody's going to ever knock on the door and say, hey, your time is up.
Yes.
Time to go.
Yeah.
Yes, I agree. So I have another story. So basically, when I was 25 years old, I bought a house or condo, I should say, in Malibu, right underneath Pepperdine, and I didn't care for living in Malibu, so I moved to Hermosa Beach, and so I got a renter. The renters went to Pepperdine. They thrashed the place. I was young. I was not in the real estate industry yet. A couple years later is when I got into it. And anyways, I let that house go. Today, I just looked at that condo. It's worth almost $1 million. If I would have held on to that property, I bought it for $160 with 10% down back at the time because they did. Yes. So anyways, so a little mishap there. Okay. So I have one more
That's
example.
A very sad story, Gabby.
It is a sad story. I have two like that. I know, but I didn't know what I was
Like,
doing.
can every white tie, please?
Yeah, I know. Like, if I held on to everything I bought, then I would be really sitting pretty. Not that I'm not, but I would be in the millions opposed to the hundreds. Okay, so there you go. Okay, so I have another example. No, I don't. Nope, I don't. That's for the next podcast. Sorry.
I know.
So the other one I want to talk to you about is the DSCR loan, which is investors. They could put 20% down. They have to own properties already. But they don't have to show their taxes. Once again, it's not the bank statement loan. It's more, we're going off the rental income for that property. So why would investors want to purchase in this market as long as the rent covers that mortgage? I'll start with you, Andres, again.
Appreciation, write-offs, and leverage. I mean, our company, I built it using real estate as leverage. We bought, we hold and rent, and we also bought, fix and flip and build. And every time I will flip the a property, leverage that equity to continue investing that into a different business. If you can leverage the rental income from that property, why not? I mean, what else is there other than real estate where you can see it, you can feel it, you can actually make your independent decisions on that asset, and like I said before, get returns over 20% year after year. And from, most people, they just need to get educated about all of the options that are out there, because it is not impossible for a normal average, family to become a multifamily owner. You start with 4 units. I mean, you can actually use an FHA loan up to 1.2, 1.25.
On the 4 units?
Yeah.
Yes.
You can occupy one of those units. From there, you can actually wait 2-3 years, refinance, pull the cash out, the equity, the equity that Megan was mentioning, and move up to, 6, 12, 8 units. Buy a house yourself. Now you own an apartment building. You have your primary residence, and then wait another 2-3 years, pull out a line of credit, and buy another one. And little by little, you start building your own portfolio of real estate. So, great lending programs there.
Yes, and I love the FHA loan for the 1 to 4 units. And the one thing that you have to get by is the self-sufficiency test. What that is you take the total of the mortgage payment, you times that by 75%, and you take the total rental income of the market rents, not what they're actually getting, but the market rents. Times that by 75%, and that mortgage payment can't go above that. So that's the challenge when you get an FHA loan for the units. But as a lender that's been around for a long time, I know how to calculate that to make it work for someone that's buying that. Then we also use 75% of the rental income of the units that they're not living in to then use it as their income to get them higher. For instance, I just had one that I was telling you earlier that they put an offer in at 1.1 million up Northern California, and the sales price is actually 1.299, and it's a VA loan. A VA loan does not have self-sufficiency tests, so we didn't have to worry about that part. But they came back and the seller rejected that. Like, can you get them higher, any higher? And I said, okay, let me revisit it. And so what I did is I had one of the borrowers. There's two borrowers. I had one of them pay off their debt of, let's say, $800 a month, and we got him to 1.2 million. So now today they're putting another offer in at the 1.2, and now they're only below 99,000 opposed to 199 they were before. So basically now they're putting the offer today. Let's hope they get that. You know, that would be a great property, and it has great income, great rental income for them. So I'm excited. I'm hoping they get it. And once again, on the VA, they no self-sufficiency tests, so we're good to go.
I think this is like overwhelming. Like if I was listening, I'd be like, okay, break that down for me. But I think that for me is my joy. And I think Jackie, because we really do a lot of the same things in real estate, is helping like the average family buy a home, which is like our greatest joys. Because it's like, I don't expect any of my clients to become, own multiple brokerages or apartment complexes one day. Obviously that's the dream for everybody. But for me, I'm thinking like, I want to help these people get in and, not have to have the stress of the renting, and then you give them that confidence. And almost every single time I've helped somebody buy a house, when you think they can barely afford it, they end up buying other ones, and then they tell all their friends, you have to buy a house. What was I waiting for? Even with these rates, they're like, oh my gosh, I was paying $3,800 a month for rent, living in this crappy house. The landlord never even fixed anything, and now you can paint the walls, you can do the things, you can have all these experiences. But the number one thing you have to do is be educated by a lender first and a realtor to even know what your capabilities are. I've been so busy this year. I'm just like, you're like, oh, have you slowed down? I'm like, I think I'm the busiest I've ever been because I take the time to educate people. I really care about their situation. I know they still have to buy groceries. I know we have to fill our cars with gas and it's so expensive. So, we just have to help get people. And do you need an expensive car? Then no, sell your car.
No.
Do you want to rent forever, or do you want to drive the Mercedes Benz? We just have to be really honest with people. But
yeah,
I think it's great. I mean, personally, no market scares me.
I agree. Yeah, I was telling Megan, I go, yeah, I sold my really nice car to, get a car that, I didn't have a $1,500 monthly payment. Not that for me, I like to be under the radar of I don't need a nice car to.
I just paid mine off.
Yay.
Which was weird. I've never done that, but I thought, okay, I'm not going to go get the same car. BMW has not changed their model yet. I'm not going to go get the same car for a $500 extra month payment to have the same look. I refuse to do it.
So what kind of, I'm going to put this to Jackie, what kind of loans are you seeing your buyers come in with? So I just gave you a couple examples of loans that are coming in. What are you seeing for your buyers?
Well, I think, of course, we're seeing the traditional conventional loans, FHA loans, but what I've been seeing a lot is people still want the down payment assistance. They want the help. They might have a little bit of money for their closing costs, but unfortunately they don't have all of it, or they still need money, for their down payment. And so it's a little difficult to try to get that help from them, especially when the funds are gone. Then, they're gone. But that's what I've been seeing. A lot of BA too, but mostly a lot of people that want the down payment assistance.
And right now, as a listing agent, I go to these listing appointments and I tell my clients, hey, these rates are high. You're going to give closing costs, or you're going to help buy down the rate. So maybe tell the people out there, like, I do need down payment assistance. Like, well, maybe we'll go standard FHA, but we're going to get you those gifted funds from the seller now because the market has now transitioned.
But you know what? That is happening a lot. I mean, before, and a couple of years ago, there's no way we would have gotten closing costs for the client.
Oh my gosh.
But
I was
now,
like, you don't even say closing costs out loud.
Absolutely. Yeah. I just had a VA closing Cal City, and we got $15,000. I mean, I don't know how. I mean, and he had no money to put down. So it was fantastic.
I
Yep.
love that.
Not to mention new construction. Developers are giving just by default. I mean, I have a client just one day on the market is like sellers willing to pay buyers, buy down rate, the 3-2-1.
Mm-hmm.
So, you know, going back to educating the consumer, if you really take the time and detach yourself from the expectation of the outcome, and you really take the time to educate the consumer. By the way, if the interest rates right here, there is a program where you can buy down the rate 3-2-1, and the seller will pay for it, which is going to allow you to get into the house you want with a lower mortgage payment, and it slowly for the next 3 years is going to get to what it is. I mean, and we all know these rates, I mean, they're going to change within the next 24 months. Most likely they'll be lower. Then they can refinance and property values will continue going up. So from there, they can sell, refinance, a HELOC, and go into a bigger property or invest. So
Yes, I completely agree. So, okay, so let me tell you about the example that I had for you guys. So it was a 512 purchase price, FHA 3.5% down. We got the client, we just closed last week. We got the client 6.25%. But then we did the 2-1 buy down, which the first year it starts at 4.25. So that payment at 4.25 was $33.39, and then the second year is 5.25, and that was $36.49. That's principal and interest and taxes and insurance. And then the third year, so we go to the third year, and then it ends to the 30 year. It was $39.61. It at least gives them a option where if the rates, we're hoping that the rates will come down in the near future. When those rates come down, then they can refinance to then get it down.
Is there a penalty to do that? Because I was always kind of confused on that. So if the seller gives us like $15,000 towards that rate buy down, and we go to refinance and 6 months later and they're like, actually the rates just dropped, is there a penalty to the buyer or no? Because it was paid for in
There's not a
advance?
penalty to the buyer. There's only a penalty to the loan officer. So the loan officer,
6 months?
We don't care.
People,
6 months,
yeah,
right?
yeah. So
Yeah.
people don't. I mean, loan officers don't want you to know this, but here I like to educate everybody. And basically, it's 6 months that the loan officer would have to pay back their commission if they did the refinance
Yeah.
within the 6 months.
Wow.
So that's there's no.
So after 6 months, you're in the clear.
You're
after
good, yeah.
6
Yeah,
months,
I feel like most people
tell-
don't anyways in the first 6 months.
I tell my buyers, I tell them, like, if you wanted to, then I would have to, or let me do your loan again, then we're
At
all in
least
the
you-
clear,
yeah.
so yeah, so
Was that a house?
that was a house. It was up north again.
So just to throw it out there, and I'm gonna use my own brother's example. Before he was renting a condo, 2 bedrooms, 2 bathrooms for $1,700 a month. Then he moved to rent a house and he was paying $3,300 a month. He actually bought one of my own flips.
Nice.
Great client. So he bought it, I want to say maybe 3-4 years ago. He bought this single family residence with a detached garage and reseda. His mortgage payment was $2,900 a month. Within the first 6 months, he got the garage converted into an ADU, charging $1,600 in rent.
Perfect.
So now his mortgage payment is probably $1,400 a month as a homeowner.
Wow.
And he's probably sitting in $350,000 equity right now.
and
I
that
love
renter
that.
is also paying
And
down his like.
He's paying down
yeah.
the principal.
Mhm.
He's living in a house that he owns. He actually got a HELOC to buy a business, and he's still paying less than going renting an apartment right now.
I love that. I
So
love that.
a lot of homeowners can actually leverage that.
Well, and a lot of people don't know that they can buy a house with an FHA 203K loan, add $50,000 to that loan. They're still walking in with only the 3.5 as long as you're getting the seller to pay the closing costs. They're walking in with 3.5. So when you're showing properties to your buyers and the property does not look good, say, let's get a 203K, close on it. They have 6 months to do the rehab on that property.
That means they're giving you the money to rehab the property through the loan. So just to
Yes.
specify what that
Yes.
means.
So all they're doing is coming in with that 3.5. We add that, let's say that 50,000. A lot of people have a notion that you could only get 35,000, but that's not the case. You could get up to 100,000.
I was just gonna ask, what's the cap?
It's not. That's not
okay.
even cap. It just
Oh, okay.
depends on the area and depends on the appraisal value that you could get for that house.
Okay.
And the only difference is above 35,000, you need to have a HUD specialist on there. So it's like an extra 1,500 to have the HUD specialist on there. So I definitely specialize in those loans. I specialize in the down payment assistance to get buyers in with zero. It's worked wonderful. I used to put a lot of clients into CalHFA, and then years later they came back once the equity was there. We refinanced, put them in a conventional loan, and now their payment, a lot of times their payment went down from the time that, I mean, it's not happening right today for the fact that the interest rates are so high. But when they get the down payment assistance, what the clients need to know is they need to be in that house for a while because they need that equity to build to then pay that money that they borrowed for that down payment. They need that. Some are grants. On the grants, you do not have to pay
I
it
think
back.
you have to keep the property
3 years
without
probably.
3 to 5 years without refi or selling. Otherwise, you got to pay it plus a penalty of 20%.
Wow.
I like
But
that.
still, I mean,
But the penalty of renting is always greater.
Yeah,
that's my
that's
argument.
100.
Yeah, that's 100. That's what my post today said. Megan be the realtor. I was saying that I don't have a crystal ball of what these rates are going to do, but I do have a crystal ball to let you know that renting is never the positive thing to do with your money. I get that there's transition things. People get divorced. You're in the interim of things, but like long term, do you want to? I've known people, and it makes me so sad that nobody in their family ever owned a house. Like generations of non-ownership, and it's like
Well, you know what I
no-
want to
no
throw out
inheritance.
there is we could have families purchase together. I know a lot of the Spanish community, they purchase houses together, but let's say two friends got together and they purchase a house, they live in that house. I mean, they're renting anyway. Let's say a whole bunch of boys that live together, a whole bunch of girls that live together, they purchase, they live in that house for 5 years, let that equity build, they sell it, they divide that equity, and then they buy their own houses. I mean, that I think, since these interest rates are so high on a 5,000 monthly payment, now they're each paying 2,500. So it makes sense for us to guide these buyers. Okay, if let's say, do you have not a co-signer, someone that will buy with you? And I think that would be a way to, in this market, to get these buyers to be comfortable with
you
that
can get
payment.
gifted funds for any home. So saying your grandparents, your anything. So people think I don't have the down payment. Even on an FHA first time home buyers, you can get the full down payment gifted, correct?
Correct.
Yeah. So those are good options.
now I have a question for you, Gabby.
Uh-oh.
So if I have 401k IRA, can I borrow against that to use it as down payment? And is there any penalty, taxes?
So it depends on the
'Cause
one
a lot
that
of
you
clients
have.
don't know.
Right.
They think they don't have money, but in reality, they do have money.
Yes, a lot of the ones that I have dealt with, they basically allow them to pull it out tax free to buy a house. They can't just pull it out to use it for whatever, but they are allowing them tax free to pull it out to buy a house.
It's like the one time though, right? You get to do that once or something.
Nice.
That I don't know. It all depends on the 401k that they have or the IRA that they have, but they are definitely allowing them to use that money to buy a house. So there is a lot of money out
Because
there
a lot
that
of
is
people,
usable.
again, it goes back to lack of information and education, that you have the money, just the fact that you don't have it in your bank account and you don't see it, you are putting money aside towards that. So, I mean, while you're alive, why not using those funds?
Yep. I just have a buyer that on Friday, I said, as soon as we get that appraisal in, then I'm going to ask you to pull the funds out, and it's free money, not free because she's been putting it in there, but free, for not taxable. And she was so happy. She's walking in with like 25,000. And, whereas when I first started talking to her, she said she didn't have any money. She had $12,000, put away somewhere, but that wasn't, and I'm like, what about a 401k? And when she looked into it, she had that money. She is so excited to be a homeowner eventually. Here next week, she'll be a homeowner. And I just love putting the first time home buyers into a house. Also, did you guys know that if you have not owned a house, you guys, I'm sure you probably know this. If you haven't owned a house for 3 years, that means you're a first time home buyer again.
Yeah.
FHA.
I think really, actually, when you asked Jackie, I was like, let that be my question. Like, what are the loans I'm doing right now? I have people who have $500,000 plus in the bank. They're doing FHA because their rate's better. So just because
makes
you
sense.
just put more money down towards that FHA because you're going to get a better rate. Like conventional financing right now is, not that I've seen, it's not the best option for the better rate. And everybody right now is all about the rate. They're thinking about the PMI, but their concept is like PMI versus me refinancing in the future. Like, I work
Well-
with a lot of engineers. They're doing all this crazy math in their head of
I
the
think
best
also
route.
what people need to know is you do not need to be a first-time homebuyer to use FHA. You can't, as long as you don't have an FHA loan, you could use an FHA. The difference is if you have a conventional loan and you're purchasing with an FHA, and you need the rental income from the house that you're leaving, you need to purchase 100 miles away from that house in order to use it. They created that because in 2008, when everybody was, they would live in their house. They were living in their house. They're like, this is the value is 200, and the basically they were what's it called when you're like, your mortgage is higher than what it's worth.
Or your ratios are off.
Not the ratios, but okay. So you
Didn't make sense financially for them to buy another
they
house.
couldn't sell the house because it was worth.
They're upside down.
That's the
upside
word.
Down.
Upside down
Got
on
it.
the mortgage.
I was like losing the
upside
story.
down. Yeah. So they're upside down, and so basically in 2008, when the market shifted, 2008 to 2010, a lot of people were buying a home and leaving this home, letting it go foreclosure. So they created that rule. So now you can't. The rule has been there for way too long, or definitely, but the rule is still intact that you have to buy now 100 miles away. That's how they got.
I'm
by
grateful
that.
for these rules because people doing those things is what sabotage the market. I always tell people, I'm like, I like stricter guidelines. The Dream program, I would never even use that for my client. I'm one of those weird agents where I'm like, I don't even know if this is better than renting certain things. It depends on who you talk to. But yeah, I also think, we were talking about in the car on the way here, just because a market goes to crap does not mean you need to sell. And I always tell my clients, I'm like, you don't have to sell just because the market went down and rates
No.
went up. Like, this is your asset. You
Your
can choose
mortgage-
to sell whenever you want.
Your payment is going to stay the same as long as the property taxes, as long as your property taxes will change a little bit, but not that much. And why sell when you could hold on? Like, there's several houses I wish I would have held on to, and I would have had that
Like
equity.
that $1 million one.
Yeah, the $1 million one.
I
Yeah.
wish she held on to that too.
I know. I
You
know.
could adopt me.
I believe I sold a foreclosure back in 2009, 2010, right in Malibu, below Pepperdine.
Was that her house?
No, it was a foreclosure. Probably like 480 Ocean View. It was one of those townhouses, small
I don't even wanna
community.
know what that is now.
Nowadays, I'll probably say that's, easy. It's probably 1.1 or so.
Yeah. Yeah.
So many. Honestly, real estate is the best asset. I was just telling my daughters, when you go to college, you're going to have your own apartment building, and you're going to manage that apartment building to earn your income, and that will pay for college.
Nice.
I think it's better than any college fund.
You can adopt Jackie and I too.
I know.
With that concept. I do like that. I said, because I thought, I don't have kids yet, but I thought I'm at the financial, like the minute I know that I could have a baby, I would want to buy them a house, put it in their name, in a trust, all of these things to protect them. Because I'm just thinking to myself, if my parents would have done that, like I had my dad was a single income earner. My mom was a stay-at-home mom. Like, people weren't making like real estate risks, but I think to myself, they could have, it's just the lack of education and the fear of the unknown. But there's so many opportunities in real estate, and that's how I'm going to retire.
I think we need to educate our younger generation that, when we were growing up, we all wanted the big wedding.
Oh, yeah.
Well, smaller wedding, have the parents, instead of putting all the money into wedding, put it into house. So that's what I did with my daughter.
More doors instead of a big ring.
Yes. Well, the ring is okay.
Because, and you know what? I think you're absolutely right. Me and my husband, we didn't have a huge big wedding. We went to Vegas, and it was done, right? But you spend tens of thousands of dollars on one day that you don't really get to enjoy because the
But they
party's for everyone
justify
else,
that.
right?
How do they justify that over buying a house? They don't have a money for that.
Exactly. Yeah, you have the money for this, or a nice car, or the nice bag. Don't get me wrong, we like nice things, right?
We do.
But let's make sure we prioritize first,
And it starts
because-
with the parents.
Absolutely.
But a lot of times, so I actually was at a speaking event, and I didn't know, because I was just bringing it up about my parents were the safe bet people. Like my dad retired right at 62, which is like not that normal anymore, right? But they were savers, and they taught me to save. My mom still calls me, how's your savings account doing? She still worries about me. But that was like built into me, and I didn't realize how many people were brought up to never talk about credit scores, saving money, all of those things. But it is doable, it is fixable. I think people feel like, well, it's never going to happen for me, I'm just going to throw in the towel. And I know it's fixable because those are the people I help constantly. You know, most of my buyers are in that $400,000 to $600,000 range, which is what people are paying for the average rent right now.
Right.
Well, and I think it's important too for parents to, when my kids were 16, I put them on one of my credit cards. Not for them to spend on it, which is funny. My youngest, Ezra, I put him on my American Express, and like a week later, he put like 2,000 on. I'm like, Ezra, that was not. I had a trigger to
Can you
wait.
adopt me?
You know, she's not all about
I'll keep it at 1,500.
I'm like, Ezra, I actually had something that stopped it at 500, so you could actually have it where like if they overcharge. So I caught it, and it didn't actually charge. But I was like, Ezra, this is not for you to charge like that. He's like, oh, okay, you know, this is for you to build your credit. So now he had, you know, they all have 700 plus FICO scores
passing
because
it.
the parent, you know, is looking out for them. But I didn't know what I was doing until I got into this industry. When I got into this industry, people taught me, and I like to teach others. Like, this is what you need to be doing to get yourself
foundational. I was just at a wedding in Santa Cruz, and this guy, and most of the wealthiest friends I have they didn't go to college. They're business owners, savvy individuals. But we were talking, I said, my mom used to make me balance her checkbook to do my math, like for homework. She's like, I want you to balance my checkbook. And he goes, we actually teach classes of fundamental things like that, where take away online banking, how much money would you have? And people go, what? Like they would have no idea. So it's like people are just not in charge of their own finances. It's like ignorance is bliss, but ignorance is bliss is not going to get you a house. It's not going to build this wealth. It's not going to let you buy apartment complexes. But I think there's so many exciting, like just this podcast brings, you know, education to people to know it is an option out there to buy in California, which is the coolest state. Let's be real.
I enjoy the weather.
Possibilities are endless.
The
You
weather.
know,
I
just
enjoy the
getting
weather.
Educated. That too. Yeah.
That's all he could say positive, I
Yeah.
felt like.
No.
Yeah,
We
sunny.
do. We have the greatest weather. That's
Diversity, the weather, I mean,
Wine. We have the best wine.
economy overall. I mean, just sell everywhere else and move to Cali.
look at the future is bright. Everybody, California is bright, and it's only going to get brighter. We are through a downtime as far as what everyone's going through, but the future is bright.
So I checked, I was reading this report. In the last 2 months, home values went up 3.3%. Over a year, they went up 3%. Mind you, regardless of the rates. Less than 2.5% of homeowners are in default. So you have about over 98% of homeowners that are paying the mortgage. Over 60% of homeowners are actually sitting in equity. And yes, a lot of them, they refinance, they purchased their homes back in 2020, 2021 when the rates were below 4%. But that's why I'm kind of like thinking a lot of those homeowners will take advantage of a second mortgage, a line of credit, to leverage that equity without damaging or touching their original interest rate. And that's going to continue building more wealth and attracting more homeowners to invest into businesses and other properties. So everything is coming back to, you know, help the economy of California. But when you actually put things in perspective, a lot of great things are happening. It's just that the media is toxic. I personally don't watch the media because their job is to sell you this negativity. But when you actually look at the reports, from a 9% inflation, we're down to 4%. Unemployment rate is below, I think, 3.7. So in reality, a lot of great things are happening. And meanwhile, even though the rates are high, because of lack of inventory, you know, property values continue going up. So, and I don't think the rates are high. It's just the average rate. In my opinion, I think that's
normal.
The rates-
People don't realize that back in the 1980s, and it was actually October 1981, interest rates were at 18.5%.
Imagine that.
18.5. Like, I can't even comprehend how that
but
was
if they
normal.
still own that house, it's paid off by now.
Absolutely.
There
But-
you go. That's a great point. Over time,
Right.
over time, I mean, your interest rate can be 20%, but over time, the house is getting paid off, and then you're sitting on equity.
And then in 1997, the interest rates were 6.25. We're exactly where we are right now. So it's well, that's on a FHA. Difference on FHA and conventional. So
There is a graph that over the last 40 years, the average rate was 6 to 7% over the last 40 years. So in reality, our rates are normal. It's just that people got
Fixated
spoiled
on the two
with
two and a
the
half.
low 2s and 3s. And in reality, the way I see it is, look, even if you go and buy a car right now or you get a credit card, your interest rates 9%, 7%, sometimes 20. It just depends on FICO score. But if you're paying 12, 15, 16, 18, 20% on a credit card or an auto loan, why paying 6.5%, 7% for a mortgage over 30
I'm
years?
gonna steal
It's
that.
crazy.
That is the best point because people never talk about their credit card
Yeah.
interest rate. When have you ever been at dinner and somebody's like, my credit card interest rate's 21.59%? Nobody talks
No.
about that.
Can I
But-
refinance?
Yeah, but they're
Think
willing
about
to
it, 'cause
pay.
that's what it is.
I always joke. I'm like, you got that shirt on sale for $30. Now you paid $120 because you never pay off your credit card. So let's stop shopping the sale rack. Same thing with that should be the name of our podcast. But again, it comes down to exactly what you said. I made my circle so small in the last few years because of negative people. I don't want to be around anybody who's negative. I mean, it's already hard. We're out there hustling and grinding. I don't have time for negative Nancy to pop in and tell me her 2 cents. And these agents who are on Instagram posting this negative stuff, I'm like, who would work with you? Why would I hire the realtor who's just like, you're making me feel worse about my decision?
Which the funny part is in social media, they're putting these negative, information. And then when they go to the listing appointment, it's like trying to sell the positive story. It's like,
Yeah, but it's
look
not
on
going to
the
work.
side, like on the listing.
You know what? I think what this is, the fake COVID market, it's like agents could have said anything and people are like, I don't care, just get me the house. Now I go to listing appointments, they're like, how do you market? How are you doing? Like people want to know how you're working for them and they want value back. And I'm like, if I'm going to pay 8% too, I want value, right? I want to make sure I actually like the house now. People were like, we would joke like, there's no roof on it. Fine, I'll buy it. It's all good. Now people really care about the condition of homes. all that
value over
stuff.
price.
we were in the car and Megan took a call, or you called your client, and she said, the lady thought that you were coming to film.
She
the
thought
house.
I'd bring my photographers to the listing appointment.
Right, and to the listing appointment, and
A lot of people
She's like,
think
"Oh, I
that.
guess I got the but not that
No,
But,
so I think she's hiring me. She thought my photographer was coming. But I was like letting her know and reassuring her. But again, she thought these things because people don't know. And then it took me back. I'm like, maybe I should have done a better job explaining to her on the first phone call of like, this is what we're meeting for. I thought it was kind of self-explanatory. But yeah, it is.
communication is key.
Yeah.
For sure. Okay, so one last thing. So what simple advice would you give a buyer? Let's start with Andres.
Oh boy. Simple advice for buyer. Location, and whenever you're buying real estate, just look at every single angle of potential opportunity on that property. Because a lot of homeowners are buying a property based on location. They're buying a property based on square footage, lot size, without knowing that maybe the lot size will allow them to have multifamily or split the lot. A lot of properties, depending on the school district, will gain more value over time. So just always take your time to, even though you're working with a realtor, make sure, number one, realtor is full-time and experience. Same thing with the loan officer, full-time with experience. And then do your own homework. Nowadays with technology and so much information, in the media, you can have all of the information that these professionals are not given to you. And look at every property from every single different angle.
So simple answer would be hire a real estate agent.
Hire me.
Hire Jacqueline or Megan.
Yes.
Ja-
Mostly Jacqueline.
Mostly Jacqueline.
I'll remember that. Negative. No, but I think it's true. But you have to look at it for long term. Are they going to call me? Hopefully, because you built that relationship. We're going to talk to them for the next how many years? Can I sell this house to them again? I think some agents during COVID are going to. They've lost their relationship or life because they talked their client into a crappy house. I always tell my client, I'm like, I don't think I can sell this for you for this price in the next 20 years. Like, we have to be realistic. Like, is it a good investment?
Yeah.
Are you in the right area? School district, condition.
Yep.
That's a super solid point.
We're doctors, honestly.
We are.
We are.
We are. Yeah.
I'm
we
a private eye.
self-diagnose all the
I would
time.
say I'm a
No, I
private
do. I do it all the time.
investigator.
I think for me, I would just go back to doing your homework. You know, talk to the professional. Stop listening to the outside noise. Do not ask your best friend for advice, because chances are she's not or he's not in the real estate industry. So talk to the lender that knows what they're doing. Make sure that they do have experience. You know, look at their track record, and then make the best educated
and
decision.
hire the right agent.
And
again.
your dad is not a home inspector.
That too.
Yeah.
You guys, I want to thank you so much. This has been so wonderful with all this knowledge that we've been able to give our buyers. And I want to close out with a verse from the Bible, Philippians 4:13. I could do all things through Christ who strengthens me.
I cannot believe you just said that. It's on my ring.
I love
live by
it.
that.
Right. I love it. Everything I do, I know we're not supposed to bring politics or God into business, but that's all changing, you guys. Everything I do now is all about God. So I want to bring him everywhere I go.
Well, that goes along with my positive vibes only. So good.
Love it. It was a pleasure being in your podcast.
Thanks.
Honestly, like, great information. I learned a lot from these two ladies. I mean, honestly, very excited to see the outcome.
Awesome.
Thank you so much for inviting me.
Can't wait.
Yep. Excited for the next one, Gabby.
Yay.